Good evening, everybody. All right, so I always get the rhetorical question in private messages is, why is this market going up like it is? And I can truly answer that with full honesty. I have no idea. But I don't have to know. We don't have to know. All we have to do is analyze what the charts are telling us the market is doing. So yes, Pittsburgh won big yesterday, Don. It was a good game. So the rhetorical question always is, well, how do you analyze this? Why is this market going up? And for the last 40 some odd years that I've been investing, I never knew why it was going up. And for the last 30 some odd that we've been using candlesticks, or might even be longer than that, don't have to know. All I have to do is analyze what everybody else is doing. So I always come back to that basic analysis that the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. Now, why they're buying and selling, we don't need to know. But they have already done their analysis, whether it's fundamental, technical, whatever. Now, 90% plus, it's fundamental. So all we're really doing is seeing what the results are of the results of their research, no matter what their research is, of what they want to do. So all we really have to know right now is the simple rules that we can apply using the candlestick signals and the T-line. So as long as we're above the T-line, we can pretty much assume we're in an uptrend. As long as we're above the 3T line, this is the 3 exponential moving average, it's that much more confirmation that the bullish strength is still relatively strong. Same scenario over here in the NASDAQ. Nice fry pan bottom, in an uptrend ever since they closed back up above the T-line, with the caveat that we're in an uptrend, but it's starting to gap up. And we always have to refer back to what the Japanese rice traders tell us about investor sentiment. They start buying exuberantly at the top. That just gets us a little bit more prepared to be ready to take some profits if we start seeing some weakness up here, which is we're getting right near this level. And I don't know what they're doing after hours. Let's take a quick look. Down 36 points on the Dow. I don't know if they trade the Qs. No, they don't. All right, so the other indexes also acted well. Transportation index, you can see what it's doing. It's now getting indecisive up here, doji, doji, doji in the overbought area. We're getting near the top of this channel. So this should prepare us, not because it's not still in an uptrend that's preparing us to take profits. The uptrend right now is becoming very indecisive, which we can see by the nature of the dojis up here in the overbought area. So here's the quick analysis assumption that this index might be getting ready to reverse because you've gotten up here in the overbought area and you're starting to see dojis and you've moved a little bit away from the T-line and you're getting toward the top of the channel. That just gets you a little bit more prepared to be ready to take profits if you see things that are starting to act weak. This. Same scenario over here on the S&P 500. Still above the 3T line, but you're gapping up in the overbought area. So what could you anticipate based upon this knowledge right here, that you've moved a good distance away from the T-line, you're getting up toward this level, that if they happen to open positive tomorrow and take it up and get right into this area, you get a lot more prepared that if they start bringing it back down, you start taking profits. So this isn't rocket science. This is just knowing what investor sentiment normally does during the top of a price move. Now, that's not to say that this is near the top of the price move. For all we know, it could break right out and continue into a wave 3, which would be essentially wave 1, wave 2, wave 3 being this same magnitude. So these are all things that we have the ability to visually analyze of what could happen, but we get a little bit more clarity by seeing what type of signals occur up in these levels. So this is, again, you can see how the T-line is a very, very important factor in when you're in an uptrend, when you're in a downtrend, when you're in an uptrend. And that's the thing that really solidified my trading. I always probably have expressed in the past that I made good money trading the candlestick signals, but my earnings got greatly enhanced when we introduced the T-line to our charts. Let's see, while we're here, we'll take a quick look at at crude oil. Crude oil backed off today, so you can see what the nature of the crude oil trend is. Pretty much flat right now. Let's see, the reason I want to put this on here, let me see if I can. You can see what the overall trend over the last couple of years has been for crude oil. Even to that point where when it hit bottom there a few months back, you had to pay somebody to take your crude oil because they didn't have enough storage for it. But you can see what's happening on crude oil. It's pretty much gone flat. And that's a function of the amount of crude oil that has been discovered in the Western Hemisphere, especially North America and Canada and that area, that there's enough now that we supply our own demand and even export it, which means the biggest user of crude oil in the world supplies its own, can supply themselves, us. That means the price of crude oil is not going to be fluctuating like it was when other people were dictating what the supply would be. That's shouldn't have getting into this too heavily, but that long dissertation is to say if crude oil is flat, you're probably not going to have a lot of opportunities in the crude oil area, meaning those stocks are probably not going to move around as greatly as other areas. Right now in gold, you can see how you had the wedge broke out, now coming back up. Gold might be coming up, which means your gold stocks are probably things to start watching. Ego, Harmony, setting up nicely. I think this is a silver stock. Silver is also in the process of coming back up. So you can see the wedge. You can see the breakdown. Now you can see remember our simple rules. The further away you move from the T-line, the higher the probability is going to come back up and test it. So that was a reasonably good trade. And now you're seeing it's above the T-line, making the evaluation a lot easier, especially when you can see how the T-line makes for a very effective confirmation of the signals and the patterns. Just for fun, we'll see how soybeans have gone through wave 1, wave 2, was in wave 3, and today they slammed it. Still may have more upside if they bring it back up above the T-line, but these were good trades right in here. Because would you consider harmony a scoop? I don't know. Harmony. Not necessarily. No, a scoop pattern is a very recognizable flat area. This is trading up and down. A scoop pattern is something where the handle is very flat. And it didn't really move all that much. What was the other one? This is our other one that we're in. That's kind of a relatively flat handle before the scoop. Well, but now you're trying to find a term for it. If this is what you were considering the handle, it's yeah, I don't know how to answer it. It's flat, so you wouldn't be buying this because it's a scoop pattern. You'd be buying this because of your reversal signal. Okay, so here's what's happening in the ones that we've been recommending. Here now, we recommended Chewy today because you could observe the obvious. Notice how it traded indecisively right here on the 50 in the T-line and then started breaking out. Let me make this a little bit bigger. So this right in here, almost kind of a bullish flutter kicker off the 50, pretty much told you they were supporting here. Now, what's the rest of the analysis of this? Well, you can see that there's been a slow, steady uptrend that at least probably comes back up here and maybe back up to this range. So essentially what we're trying to do is recognize when there's been a change of investor sentiment and then see what everybody else is watching. Yeah, but we've got better scoops in here. Now we'll go right to the scoop just to get them out of the way. You can see kind of the flat handle on CGC. Now, that doesn't mean anything until you get over here and you start seeing up there's buy signals. They're coming back up above the T-line. What do I got going on here? Looks like a buy area. And look at this. It had a flat handle. So now not only is this probably coming back up to the resistance level, the flat handle and the 50, but now I've got the prospects of a scoop pattern. The scoop pattern is this type of result. And I say this type of result, which basically says, if we can see what happens in human nature and the patterns they set up, this is what we can expect. Is this type of reaction coming out of a position. So that's the whole point of candlestick analysis, is to graphically, or let's say it the other way, to visually recognize the graphics of the same reactions of human nature time after time. That's why those patterns become recognizable. So here there's that bullish flutter kicker signal. There's our doji sandwich that broke out through the 50. So that's a strong reversal. Now, it opened positive today, giving us the prospects of it breaking out through this level, and didn't really go anywhere. However, you still have to put all the pieces together. Stochastic's still coming up. You bounced off the 200 with a bullish flutter, doji sandwich breakout, some profit taking. You'd still want to be an aggressive buyer if it comes back up through today's open. on CGC, the buy point, if I'm looking at this right here and I see the Morningstar signal, and I say, all right, I'm going to buy on strength the next day because it looks like it's setting up a scoop. Well, here's that entry strategy or lack of strategy. Is it opened and then started trading lower? That didn't work. However, what was our analysis? Indecision, close above the T line, stochastics coming up. What becomes a very high probability entry point? Right there at the open of the previous day, because if it opens and comes up through there, what's it telling us? That this is still all working. So I'd probably have been a buyer right here. Or I could have been a buyer right here after I saw this, because if I go here, what am I seeing? I'm seeing that scoop of a flat handle. I can be a buyer on positive trading the next day. Now, the rhetorical question is, you always get big price moves like this? And the answer is no. But you're putting yourself in situations where the probabilities of being in big price moves is greatly in your favor. To put the 50 on is that, no, the 50, the chart I have, the 50, the 200 are simple moving averages. And the logic there is everybody in the world that's managing money has the 50 and the 200 on their charts. We're not using them to tell us when to be buying or selling. We're using them to see what everybody else is doing at those levels, what their decisions are. Then we've got the 34, which is an EMA, an exponential moving average. That works reasonably well enough to have it on the chart. And then the T-line is the 8 exponential moving average. Or minutes. I don't know what or minutes means. To put the 50 on, is that an EMA? Oh, it all depends on the chart. On this chart, the daily, it's the 50 whatever. On the 10-minute chart, it's the 50 based upon the 10-minute chart. Okay, let's see. Yeah, so the 50 and the 200 are the simple moving averages. The 34 is the exponential. If you put the 20 on, you probably want to put the simple moving, 20 simple moving average. And then the 8 and the 3 are exponential. When do we start worrying about the 3T line? And when do we sell off based upon the 3T line? You use the 3T line to just kind of exaggerate the fact that the further away you move from the T line, the more indicative the 3T line becomes, or the more relevant the 3T line becomes. You use it in two aspects. One, if you see a buy signal, you can use it as an additional confirmation that if you see the 3T line come up through the T line, kind of in conjunction with your signals, that's just a little added confirmation there's been a change of direction. Then the further away you move from the T line, the more relevant it becomes. So if I was long on this scoop pattern, notice we did a doji sandwich today, getting up in the overbought area, but just as a safety factor, I would put a stop here. Now that's a pretty far piece away, but the probabilities are you're still going in this direction. The safety factor is if it does happen to turn around and come back down through this level, you want to be out of it. Okay. So anyways, these are all type of things as this is what we're going to be going through. All these little indications, or what do I want to say, nuances, just dramatically improve your analysis abilities. So there's that link. That's for this coming weekend, Saturday and Sunday. So figure on a minimum of 4 hours a day, figure on 6 hours a day. But we're going to go through a lot of charts. So what you really want to have sinking into your head is, what patterns do I look at, and what is it doing in conjunction with the T-line? Where the heck are we? We're still not even on chart 3. Here's what I was illustrating in the afternoon newsletter today. You can see FedEx broke out. Look at how long do you hold on to this one? As long as you don't see a close below the T-line. Now, why is this relevant? Because if you were like me, before the T-line came along, I'd sit up here and say, all right, I've got good profits. That's a sell signal. I'm going to be clever, and I'm going to go ahead and close out my position. If it continues up, I can always buy it back. But usually I would take that money and go someplace else and find something like this. Now I have two benefits of using the T-line in a steady uptrend. The first one is it keeps me in trades without whipsawing me in and out. Because if I got out here, I know I wasn't going to get back in here. I was on to something else, and I'd look back 3 weeks later and say, oh, dang, Jiminy Christmas, why did I get out of this position? The second major factor is, if I've got 10 positions on, the last thing I want to do every night is spend 45 minutes, even 20 minutes, as a matter of fact, even 2 minutes, analyzing what I should do with my 10 positions. If I look at this chart and I was long FedEx, how long will it take me to analyze what I should do the next day? About 1.5 seconds to say, up, still in an uptrend, let's go on to the next chart. Where am I on this one? I might spend a little bit more time. I guess I'm using this one as a bad example. What were the other ones that I had that were good steady uptrends? I have them here. Don't tell me I've got this. Oh, there it is. I can look at this chart and say, up, still in an uptrend. About 1.5 seconds of analysis. Did that one. Whoops. Oh, pshaw. I can stay in this one. Maybe I need to take a little bit more analysis tomorrow because I've done a shooting star in the overbought area. Now I can at least make a game plan. But during this time, I can look at it and say, no, nothing to worry, nothing to worry, nothing to worry. Now I've gotten to the point where I can analyze it. Same thing here. Came out of this pattern. Now you're still above, you're using a 3T line. So you can take a look at this one in a matter of 2 seconds, say, up, just stay long. Maybe I put my safety stop right here. So that was to illustrate the fact that as long as you're above the T-line and you're coming out of a pattern, you don't have to do a lot of analysis. So that frees up my time. That if I am spending time analyzing, that if I've got 4 or 5 that I can look at in 2 seconds and say, up, I'm going to stay in that. Now I find one, that may need a little bit more attention. So I can spend more time figuring out what to do with this one. I have stops in place. If I'm in the overbought area and I see it open positive and trade positive. I'm up in the overbought area, and I can see other things that might influence the price. For example, look where it topped out over here. So I see this trading up. I'm still happy, but I'm going to put a safety stop right there. Because logic says if they traded up here and then came back down through there doing a shooting star, right at that level, I pretty much can calculate based upon a shooting star in the overbought area, people taking profits right there, I better think about taking profits. So you don't actually have stops posted. If I'm sitting here watching them, yeah, I may not put on a stop. If I'm sitting here and I'm watching this and it's trading up and then it starts trading down, I might say I better put a stop in just in case they keep taking this down. In this case, they didn't. But let's say, for example, I was long this one and they opened it lower and it traded up a little bit. I'm ready to put a stop right there, that if they came down through that level, where can I logically expect the next price or that price move to move to? Eventually back to the T line. So I would say, yeah, most of the time I don't have an actual stop in if I'm sitting here watching everything. But if I see things start going the other way, such as the market's starting to sell off and the position I have is starting to sell off, I'll say, all right, it better not come down through there. Let's put a stop right there. That's going to be another hour-and-a-half session on the weekend of where do you put your stops based upon your signals and in correlation with the T line. Oh, here are the other ones. So there's our kind of our scoop pattern on NXT. Quick analysis. We're still in the scoop breakout. Very simple. Just stay long as it doesn't close below the T line. If you got into this one, based upon the fry pan bottom breakout, what do we expect after this type of breakout? At least a 45 degree. And now we're moving a little bit away from the T line, so we might use the 3T line as our stop. How do we find the scoops before they break out? You don't. You don't even care about finding the scoops before they break out. They'll become evident based upon this, the signals. Then you can start looking and say, well, there might be a kind of a flat handle here. So you're not looking for this handle, you're looking for this, and then the handle becomes an additional piece of evidence that maybe you've got a scoop pattern setting up. Always a simple stop, because there's no advantage of putting in a stop that says if it comes back down through, if it came back down through this open tomorrow, I want to stop out. Well, if I put in a stop limit that says if it hits, I'm just going to pick out a figure, 59.05, then I want to be out of this trade. Well, if they come down to 59.07, and I've got a 59.05 stop limit, meaning if it hits 59.05, I want to sell it out at 59.05. And then the next trade happens to be 59, so they've never hit the 59.05, and it's trading below that, you're not going to get executed. So now you're in a trade that you should have been out of because you put a stop limit. If you are buying based upon a candlestick buy signal, get ready to sell based upon a candlestick sell signal. It won't matter whether you got 59.05 or 59.03 or 59. You buy when it's time to buy and when it's time to sell. You're not looking to get the absolute high. You're not looking to get the absolute low. You're looking for that fat, high probability fat part. Oh, I think I've got VIPs on here somewhere. It is, so don't let me do it again. VIPs has got kind of a scoop pattern. So with that flat handle, doji, 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 bullish confirmation. If it opens positive, what's our expectations? Probably first target is the 50, but what's our other expectation? A slingshot effect. That if they can show strength and be in a slingshot effect, maybe they're going to move all the way back up here. So yes, this is exactly why you want to identify the patterns and want to see when they confirm. So not only is the pattern setting up, but the confirmation that you're now back up above the T-line just adds that much more credibility. Okay, let's see. Now we're only on 4. Okay, this one, again, because of the left-right or the bullish engulfing signal right off the 50, then a breakout. You stay long. Now look where you are. Doji in the overbought area. Where would I set my stop? Wouldn't want to see it trade back below the low of today. So I've already got my game plan in place. Kendai, you can see this. Hopefully you can see this. Now I always say you should be able to see this because it's a big rounding bottom. And I say hopefully because I realize a lot of people, like myself, if I'm looking at something, remember those colorblind charts at the eye doctor where they had all the little bubbles? And if you weren't colorblind, you could see the number 9. If you were colorblind, you could see the number 6. Well, I kind of equate that to looking at candlestick patterns. Some people just don't see the pattern. You failed them also? So anyways, observe the obvious. You got a fry pan bottom, you got a bobble breakout. You're not quite in the overbought area. And where does the breakout usually occur? When you got up into the overbought area. So Kendai is still a very viable trade. Home. Kind of a fry pan bottom left-right combo. Notice how you're staying above the 3T line. Still a very viable trade if it breaks out through this level. And that's usually where the breakouts occur, is just as the pattern is beginning. We recommended it learn because it's based right here on the 200, giving you a fry pan bottom. Where's the first likely target? What everybody is watching up here at the 50-day moving average. Let's see. Goose. Goose, this is why the patterns work so effectively. Look at your bobble breakout. This, even though you're up in the overbought area, remember, you're buying the signals when you're in the oversold area. You're usually buying a pattern breakout when you're up here in the overbought condition. But that's because you're buying the pattern, not stochastics. Now, what do the stochastics tell you? Well, obviously you're in the overbought area, so what's your next criteria? You just stay long until you see a sell signal and a close below the T-line. Could this be a possible sell? Certainly. So maybe if the market opened lower tomorrow and this opened lower tomorrow, it might take some off the table. But Could it go higher? Yes, but if I bought right here and I'm up 24%, I'm not worried about getting every exact last dollar. I want to find patterns that give me a high probability price move. Apps, nothing to do here. After the J-hook scoop type pattern, what do we do with this one? You just stay long until you see a sell signal. There's nothing more comforting, and this is coming from a person that was the worst investor in the world and very rarely had a profitable trade. But if you get into a good trending trade, candlestick analysis makes it very simple. You just stay long until you see a sell signal. So I've got a wave 1, wave 2, wave 3, but I had almost a dark cloud, not quite, but a little bit of selling. Maybe I put a stop right here, because if it came back down through there, what's this tell me? Wave 3 is about the same length as wave 1. That's giving me a little bit further alert to say, watch to see if there's going to be a pullback to the T-line. If I take profits here, what's the worst case scenario based upon our visual analysis? You could come back, hit the T-line, and do another J-hook. You could always buy back in. I did DQ. DQ, shooting star, doji. I'd have a sell stop now at today's low. If it comes down through there in the overbought condition, it's time to take profits. FLGT, this one has to open positive and trade positive. If it traded lower tomorrow, I'd close it out because it's really not going anywhere. So it's not that it might not still be in an uptrend. It's now you have to ask yourself that rhetorical question: is this the best place to have my money, or should I be going and finding something that looks like this? Same thing with fossil. If this doesn't open positive and trade positive, staying above the T-line, same question: is this the best place to have my money? I've got buy signals. Then I had a big sell signal. Now I'm sitting indecisively right smack dab on the T-line. I better see it move this way. If it starts moving this way, I don't want to be here anymore. So if you think wave 3 is complete, you might take profits before it closes, yes. Yeah, remember, the T-line is just an added factor. But if I can calculate that this wave, or even this wave and this wave, are getting big, and another element, where do most people buy? They buy exuberantly at the top. And then I have a bearish Harami. Where do I think the selling could take you back to? At least back to the T-line. So I might be getting out on this day. I do have AXNT. Where is it? Yeah, I'll get to it. What could make you short fossil? Oh, boy. I would have to definitely see sell signals and back through this level. So is this a good short? If it traded lower? Nah. There's better places to be shorting things, like up here. Or we recommended going short on this one today because of the failure, the left-right combo right here at the T-line. So here's another, not the T-line, the 50. Then it was trading below the T-line. So what's our analysis of this? It's not that it just failed at the 50 with a bearish left-right combo and stochastics were turning down. What other element do we see in this trend? It's pretty much been in a downtrend. And now that it's hit a resistance level, it's selling back off. Where do we think our next likely target is going to be? I got one trend channel here, one trend channel here. Now you watch to see if they don't bring it down to this level. Why is this a good short? Because we just went through a day where the market was up 300 points. The NASDAQ was up big, and they were still selling this off. There's something wrong in River City. Down here, Tupperware. Here's another Pshaw. This is why you want to use the information built into candlestick signals. Started taking profits up here. We could see the kind of the fry pan bottom breakout over here. We could see where the selling started, and the final nail in the coffin was a bearish engulfing signal closing below the T line. If you bought here or here, we're selling out here. Now, what was another little hint that was time to start looking to take profits? Look where they gapped up in an overbought condition. Anytime you see that exuberance, start getting ready to take some profits. Now, looked like they hit the 34, did kind of a bullish double doji sandwich. If you were buying, what's our criteria? The one thing that everybody should always have plastered in their brain or on that little stick-em on your computer screen, that if it closes below the T line, the probabilities are dramatically improved in a downtrend. So if you constantly remember that, anytime you picked up something and it's not performing and closing below the T line, the one thing that I've probably mentioned before that helped me out tremendously to get out of bad trades quickly was realizing that even with the best trading strategy in the world, which I consider candlesticks because it's been around for 300-400 years, that 70% of my trades are going to be good. But what a lot of people forget is that 30% of your trades aren't going to be good. So if I bought on this day and saw this and then saw it was still trading above the T line, I knew what my game plan was. It had to open positive and trade positive. As soon as it closed here, what did that tell me about my trajectory? It wasn't working. Close it out. Now, it used to be, that insulted me dramatically. That, man, I'm stupid. I shouldn't have bought back, blah, blah, blah. If you cut the chart off right there, that is a good buy. But that tells you it didn't work. Close it out. Don't take it personally. And that's what happens to most investors. And I say most investors because I was your typical investor. I would hate to get out of a losing position because that would just be killing my ego. Now I've gotten to the point where I want to be in the best possible trades. If I see something that's not quite working, I'll close it out. I did close this one out earlier today. I closed out the options because it was not giving me any indication that it wanted to go up. But if you got the stock, you just use that simple trade rule. You stay long. That's SRNE. You stay long as it stays above the T line. If you were short on something like this, after that big down day, if you shorted and you're getting toward the oversold area and they're starting to trade it back up above the previous day's open, close it out. That's telling you it's not in this trajectory. There might be some buying going on in here. Again, we're trying to improve our probabilities, and that decreases our probabilities when they're starting to trade back up. When we're in the oversold area, it should be trading down. All right, so let's go through some more of these AX and T real quick. Then we'll get to some new ANX. So here is one that we were looking to buy had it traded appropriately. Yesterday, what is yesterday? Friday, it opened positive, but immediately sold off. Not time to get in. Today, they gapped it back up, but they started selling it back off. There's your two dark crows. That's a sell signal. And where did it occur? Right there. So what's that tell me about my breakout of a J-hook pattern? It's not working. So that kept me out of that trade. I have noticed that in some example, stocks close sometimes slightly below the T-line in the middle of the chart on a long uptrend. So it seems, yes, the leeway is the T-line is telling you, I don't see one on here, is telling you that the longer that uptrend remains in progress, I'll find one. If you have something that closes just below the T-line, then you've got a strategy for the next day. If it opens lower, you close it out. What it has to do is open positive and trade positive to stay in it. Now remember, nobody has the T-line on their chart. So when you have something, look at our J-hook pattern with a Morningstar type signal on detail. And look what's happened over the last 3 days. They bring it down to the T-line, take it back up. Down to the T-line, take it back up. Down to the T-line, take it back up. Now to us, that's visually obvious. But what does that really tell us? That because nobody has the T-line on their chart, it's coming down to a natural support level. The only difference is when we put the T-line on our chart, we're kind of demonstrating what that natural support level is. So that's given us that added information based upon these signals that they aren't selling it off. Every time they sell it off, they buy it back. Yeah, Carl, hang on to your individual ones until I tell Jim to do the double line, and then ask that same question. EHTH, where should this not close? Back below the T-line. Which way is your stochastics going? Now they're drifting lower. And it closed below the T-line today. What did that tell us about our uptrend? It's not there. Close out the position. Cardiff. Backed off a little bit today, but still in this 45 degree. Now, depending on how active or how aggressive a trader you are, if this opens lower and starts trading lower, where do you think they're taking it? They're bringing it back down to test the T-line. You might close it out and get ready to buy it if it bounces up off the T-line. On the other hand, if it opens positive and trades positive, that tells us this uptrending channel is still in effect. VVPR. This was an example on Friday where when it came up here and it was up a huge percentage, what do you do when it's that far away from the T-line? Very simple. You go to your 10-minute chart. So up here somewhere is where you start closing it out, or maybe even here, because if you see a sell signal on your 10-minute chart, why would that be more relevant than just any chart? I don't think I said that right. But the fact that you were trading up here that far away from the T-line and you saw a sell signal on your 10-minute chart, you start taking profits. So close some out at 22.10 and some more at 22. So made a good profit on it. Now, if you were long, what's our doji rule? It's going to move in the direction how they open after a doji. So if you happen to have stayed long, hoping that it was going to bounce back up, when they open it lower, especially when they came down through this level, you close it out. Now, that seems like a pretty hurtful situation when it was up here and you closed it out down here, that is the type of thing that trains you to say, when I'm that far away from the T-line, let me flip to my 10-minute chart. What is our biggest hope when it's up here and you're in the stock? You're hoping that you finally hit the golden goose and it's going to just keep right on going. Well, probably 99.9% of the time, that's not going to happen. So you take advantage of what the probabilities are, which is built into the candlestick charts, that if you're up here and then you see a evening star signal and you're that far away from the T-line on the daily chart, take profits. That profit was from here to here was 120%. You always want to point out the fact that most people are happier than pigs in doo-doo if they can make 10% return on their portfolio in a year. If you can make 120% on a trade in an afternoon, put that money in your pocket. It's because when it's up 120%, what do you have suspicion of? That everybody else is, somebody else out there is going to start taking profits. Okay. Apple. That's a good chart. Kind of a fry pan bottom breakout. Amazon. There's kind of your bobble breakout. That's a good chart. I'll take a look at this one just because it's on my list. You've got doji, bearish left-right combo. I'd put a sell stop just below the lows of the last couple of days. If it comes down through there, where's your next likely target? They're going to be trading back below the 3 T-line on a sell signal. They're probably at least coming back down to test the T-line. So if I was long, I'd want to see it open positive and trade positive. If it opens lower, I'll probably would take some profits. NVIDIA had a good chart. There's your support off the 34. There's your doji sandwich. What do you do on this? Look how it's waffly. But what was the most underlying factor? That it could never close below the T-line. Oh, yeah. Yeah, you probably, Lou, Jim, the recording guy, will probably put in the definition of a bobble. But a bobble is merely a J-hook pattern that you can see where the resistance was and where the breakout was. If you took out the 200, you basically just have a J-hook pattern. That's kind of a J-hook pattern. But the bobble is just a more defined or refined J-hook pattern where you can see where they resisted and where they came back up. And what was the evidence that this was probably not selling off? Look what happened when they got back to the T-line. Indecision, indecision. You could see the trajectory starting in this direction. This becomes an extremely high probability that not only are we recognizing that it's a bobble breakout because we can see the pattern, but everybody and their brother that's not using candlestick analysis says, oh, they broke out through the 200. That's a good time to be buying. So they're usually buying up here when we can be buying right in here. How do you deal with stop when FedEx kind of steady uptrending stock for any reason, news? You can't. If you were trading long and FedEx came out tomorrow and said they're putting out 3 or 24 more million shares and it opens down here, there's no way to protect against that. That's just part of the the risk reward of investing. We improve our probabilities by seeing what's normally happening, but there, you can't ever figure out when something dreadful is, or not dreadful, I don't know, did that happen to Sonu, where you had a nice J-hook kind of bobble breakout, and then they gapped it down? Yep. There's only one thing you can do. It's not that you can protect yourself from that. You just need to know exactly what to do when it does happen, which is there's nothing you can do about it, but what you can do about it is know what happens, what to do when you see it happen. Which, if I see something like this and I was long, my first inclination is if it stays below the T line, close it out. So that I can take that money and go on, and that's exactly right. A surprise is a surprise because it is a surprise. Netflix, observe the obvious. Fry pan bottom, where do you think this could likely go to? Well, it might be right there for one. Here's your next target, and then there's your next target. So you had kind of a dark cloud meeting line. Right at that resistance level. So here's the entry-exit strategies that we're going to be going through using the T-line as well as the signals. If this opens lower tomorrow, what's it tell us? That more than likely this was a resistance level, and where do you think the next target's going to be? Back here. So if we wake up and the pre-market futures are showing that Dow's going to open up down 140 points, and the NASDAQ down 40 points, and this is opening lower, I'm closing it out because I've got overbought condition, a failure at the resistance level, and there's my next target, the T-line. Let's see, Tesla. Now Tesla, on the other hand, oh, pshaw. Did the opposite. It kind of gapped up through that downtrending resistance level. Or it could make it even more like that. So what do we got from that analysis? Where's our next likely target? It could be moving up pretty strong from this wedge type breakout. And Boeing, oh, so I'll get a lot of people say, well, what should we do with Boeing? So here's the visual analysis that you can see instantly. Which way is Boeing going in general? Down. What's it do when it gets up here to the 50? They start selling it off. If it starts trading lower, where do you think the next likely target can be? Where everybody's kind of anticipating downtrend, kind of downtrend. They could be bringing it back down to this level. The added confirmation is a big bearish engulfing signal. Tried to bring it back up and still taking it down. That means there's not a lot of bullish sentiment in this one. Okay, some of the ones that we saw today. Pointed out Wyoming early in the day. Look at the doji bullish trading. It was trading up here when we first recognized it. So what do you do if it's trading up here? It's already up a big percentage. Once again, as it came through the T-line, look at the pattern it was doing on your 10-minute chart. There's your slow curve breakout. There's your J-hook pattern. There was getting up in an area where you're starting to see sell signals. So you could be closing it out up in this range. So you can be using the signals, looking for the big price moves, which is very simple. I mean, I found this after maybe 20 minutes after the day started, and all I did was refresh the search and then look for the biggest percent price move. And then once you see it, it's up 20%, 18%. Do we buy? Or wouldn't buy here, but definitely would be buying here. Why? Because my 10-minute chart's telling me I got a J-hook pattern. Could be buying here, could be buying here, may not be buying here, waiting to see what it does. But at least the 10-minute chart gives you a little bit shorter time frame to figure out what to do. Where can I find your scans? Lou, they're all over the place. A lot of our scans are, depending on which scanning software you were using. We got some of our scans over on Thinkorswim, I think NinjaTrader. Lots of our scans over on Metastock. Our scans are on the, okay, the scans, I was mentioning this earlier today, Lou. We have tried to set up the scans. Now, somebody said, I think it was Magic. Did you say that it that once you get your scans set up, Magic, you might have to do a session on here to show people how to set up their scans. But I spent a lot of time trying to get the scans. We did prefabricated scans for TOS, where all you had to do was download them and they would go right to the scanning of TOS. But it was, I couldn't figure it out. I don't use Thinkorswim for my scans. I use Metastock and TCNet. But it was so difficult to try to get in a rhythm or get into the habit of using TOS as a scan that I'll use the other ones. I'd rather pay $97 a month if it's going to save me 15 minutes or 20 minutes every night doing scans. After a while, that adds up, builds up pretty good. All right, Magic, we might set that up maybe on a Saturday morning sometime. My simplest scan, Lou, is if we know the market is in this uptrend. I scan for a very simple scanning process. My trading universe is stocks greater than 5, trading more than an average of 200,000 shares a day. I will then sort it by which stocks have had the biggest percent price moves during the day. Now I can start right from the top and see which ones are moving big. Now the reason I do it that way is because there's going to be a lot of stocks that aren't in the oversold area if the market's been moving like this. If they are in the oversold area, that means there's probably something wrong with them. So I'll just look for the biggest percent price moves. Now, if the market is down here like this, now I can add another criteria. I'm looking for all the stocks that had the biggest percent price move that were in the oversold condition. That means I'm finding the ones that are coming back up the strongest. We'll do a scanning, we do a scanning session every month or so. So anyways, let me go back here. Yeah, there should be some scanning formulas down in the very right-hand bottom corner. There's a file. I guess they're in there. And so here's what you want to do on something like this. Notice how net Uptrend, 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 and then they gapped up and headed way up higher. Where do most people buy? They buy exuberantly at the top. If you were buying down here on kind of a scoop type pattern above the 50, and you've just gone from, let's say, 40 to 57, that's a good, I can figure this out, that's almost a 45, 47% profit. But what's our warning up here? We're starting to look for sell signals. Because where do most people buy? They buy up here at the top. What is another factor when it starts moving big like this in the overbought area? Everybody that was short is starting to get squeezed. So there's a statistic that if it opens lower tomorrow and doesn't immediately trade up, take your profits. Because you'll have a 90% probability or greater that it's going to stay down until all the profit taking's over. You can always buy it back when it comes back up through this level. That was net. And I thought it was so clever. When I told people you could sell everything in your portfolio and buy this one, because that way you'd have nothing but net. Oh, man, where's this guy? Get this stuff. Fat. Double bottom, or at least a support level. This one with the gap up. Consolidation. This one can be bought. And we pointed this one out early today because this was on my list. I just didn't put it on the... This is why we try to teach people to do their own scans, because the picks that I put out are just things that have good probabilities. But notice what happened right here. You had a doji sitting right smack dab on the 50. If it opened positive, what do we have? A doji sandwich breakout, which produced a good percentage move, like a 15% move today, based upon this fry pan bottom. So kind of look at this one. Got a doji that's nudging the 50. If this opens positive tomorrow, what do you got going on? A doji sandwich that's probably breaking out through the 50-day moving average. Boy. Oh, that's STGR. There's another one that's gapped up through the 50. Potentially more upside. There's a wee little teeny gap right here that could be a target. DPHC, kind of a kicker type signal, not real clean, but this is one of those, I think it's one of those merger type companies. That one can be bought on positive trading, doji sandwich. What would that tell us? This little downtrend is over. You're into the next wave. J-hook pattern on IEA. Now look at the resistance level. So what do we know about this resistance level? Well, if this is wave 1, wave 3 is going to end up here, which means they're through this resistance level. They're still heading higher on this one. That's just kind of 2 plus 2 analysis, that if a pattern is creating a breakout, you've got a lot more upside. RVP, kind of a fry pan bottom, bobble breakout, more upside. We did the scoops. There's kind of a fry pan bottom, double bottom, bobble breakout. Another one that can be bought with at least the first target probably being up in this area. And then again, you've got the target or the gap to fill up here. A lot of restaurants are starting to come back. Taste, another one that has broken out with a gap up through the resistance level. Wave 1, wave 2, look where it based, right here on the 50, then gapped up through the resistance. If this was a 3-point move, look for this to move into the $10 area. Now, Gail, haven't you seen Jim's little messages that you don't put in individual ones until we do the double line? Twillo. You can see the fry pan bottom breakout. Stay long. I'd put a safety stop at today's low. We did VIPS, VIR. There's your J-hook pattern potential with more evidence that it's supporting at the 50. Wave 1, wave 3 should bring you back up into this area. BTAI, look at the J-hook pattern potential. What would happen on a J-hook pattern if this is wave 1? Wave 3 is going to go through this resistance level. Same scenario. Wave 1, wave 2, bobble breakout through this area. Wave 3 takes you up in this area, probably getting you pretty close to the 200. JD.com. Nice fry pan bottom. And how did they break this one out? What do we want to see coming out of a fry pan bottom? Exuberance. And when they gap it up, what's that telling you about the fry pan bottom? It is breaking out. Okay, a couple more and then we'll... Bye. What do we got setting up here? There's your J-hook pattern. Now, here's another thing to know about a J-hook pattern. Look at your trajectory. Now you've got that pattern set up with kind of a little morning star signal gap up. This trajectory now usually goes into this trajectory, a lot stronger, because they've consolidated and now there's new life coming in. And there's another J-hook pattern. Where did it support? Right here on the T line and pretty much right out the 50. Remember what happens when they come up through a resistance level, they'll come back and test it. Now, why does this become a very good place to buy? First of all, we can see it's a J-hook pattern. And two, if you don't have candlestick patterns on here, what's everybody else watching? They're watching to see whether when they pulled back with support at the 50, it's supporting at the 50, so what's that give them? More confidence to be buying. That has a good prospect of starting your next up move. And the gold stocks were acting well today. Ego, MTA, these all can be bought if you want to have one or two one or two golds in your portfolio. In less than a month, it's only in less than a month, it's only 8:17. We have lots of time left. Joe, you got me there. Okay, so look at what happened when they broke this little slow curve up through the T-line. That's when the probabilities went dramatically in your favor. The T-line is such a high probability indicator that just a simple analysis or the simple description that if the candlestick signals are the graphic depiction of human nature and the T-line acts like a natural support and resistance level of human nature, when you put those on or correlate those with each other, you dramatically improve your probabilities of being in the right trade at the right time. Oh, on November 1st? Oh, that's the day after Halloween. So anyways, all right, that's about all I got. Oops. Yeah, somebody, oh, here it is. Somebody's asking for the link for this weekend. Remember, this is a bad joke? Okay. So anyways, this is the warning, not warning, but you can see the fry pan bottom. You can see this is a logical target. So you want to see what happens at that level. If they come up here and do a shooting star, that's a good indication you want to start taking some profits. Oh, I really haven't done the list for tomorrow. I was thinking of reiterating this, or we have kind of pointed this out in the chat room today. Jamel might be one. That wasn't it. This might be one. JD.com, I'm probably going to recommend in the options room, because if this is wave 1, breaking out into wave 3 should take you up pretty close to 100. Tesla is probably a good one. Which one's on your list for Tesla? Did you draw those cross lines and then a trend channel? Why did you draw? Oh, because you can see the kind of the resistance level. You can see it's kind of a wedge formation. I don't know why I would have drawn a trend channel. But the fact that they came up above this little resistance level is giving you kind of that wedge breakout. Okay, so is there any general questions on candlesticks? The silver stocks. Here's another one that has kind of a little mini scoop. There's your doji. This is pause. But if this opens positive, what type of setup do you have? Pretty much what we saw today is that doji sandwich breakout. The dimple is just kind of a place where, now this one isn't a dimple, but it's usually, if this was a dimple, it was usually the halfway point from where it started to where it would be a breakout. And I forget which one we were looking at that was, darn. There was one that, I can't remember which one it was. But a lot of times if you see a big, why can't I think of it? A big fry pan bottom, that if you see a little dimple, it could either be an up move and right back or down move and back up, but that's usually a halfway point. Does the dimple move up? Sometimes it pops up, sometimes it bottoms out. It's just seems to be an aberration in the middle of that fry pan bottom. All right, I guess, Jim, with that, do the double line. And in 4.2 seconds, do the next double line. If you usually want to, if you're asking about something, we want to know what you're asking about, so we're not giving. So, Caterpillar, look at your kind of your bullish engulfing bounce. You stay long, but you can see that you're right now at the top of that channel, so you want to watch to see if there's any sell signal up here. D-Dog, you stay long as it stays above the T-line. JP Morgan, you can stay long. It's not a real exciting looking chart, but as long as the big financials are moving positive, it means the market's going to hold up. This one, as long as it stays above the T-line, you can stay with it. Once again, not a very exciting looking chart, but I would suspect they could get back up toward the 200. So if I was long, I'd stay long. I wouldn't want to see it close below the T-line because you're not quite in the overbought area and you had a bearish engulfing signal, but you're still in the uptrend. ZVO. That's another fry pan bottom setup. I wouldn't be afraid to be buying this one on positive trading tomorrow. Good year. Kind of a scoop pattern, but it's more of a V reversal. You can see, again, the further you got away from the T-line, the higher the probability is going to come back up and test it. So you had a little best friend. And you had another best friend. Now you're right here at this level. So you've got a couple things to watch. See whether they're going to take you through this handle or whether they're going to bring you back and test the 200 and or the 50 to see if they're going to act as support and then do a J-hook pattern. So right now you pretty much want to stay long, but expect maybe they could do some profit taking back to the 200. Marna, stay long as it stays up above the T-line. Notice how you had the inverted hammer signal right here at the 50. You stay long as this stays above the T-line. PayPal, you can get ready to buy this one with the expectation there's your first target and here's your second target. So you'd be buying on positive trading, use the T-line as your stop. Magic, yeah, we pointed this one out in the chat room early today that I guess it was even in the morning comments that you could be buying this one because you have a fry pan bottom breakout, the breakout through the 50 with a doji sandwich. And what's our implication from a doji sandwich? More upside. There is probably your first likely target is to fill this gap. Oh, let's see. Now somebody's private messaging me saying, do you have to do any studying before this weekend? And the answer is no. That is what the weekend is for. And you're going to see hundreds and hundreds and hundreds of charts. Lots of repetition so that your eye becomes accustomed to recognizing the signal, the pattern, and the close above the T-line. Darn, there was something else I was going to say. I can't remember what it was. Oh, the one aspect that you will find out in all of the candlestick training is everything is just pure common sense. That once you see it and it's explained to you, the first thing that always kind of whacked me in the side of the head was, yeah, I knew that. That makes sense. That's all this analysis is. Workhorse, not a good sign with it closing back here. I probably wouldn't pay attention to this one now until it breaks up through this level, giving you a J-hook type pattern. Market anticipating imminent government USPS contract to supply electric vehicles. Yeah. So if everybody knows that, you got to anticipate that you're seeing what everybody's decisions are. Right now, it doesn't look that enthusiastic. After a long run up on these stocks, would you put a stop below yesterday's doji on QDEL? Yeah, you had a left-right combo. It opened positive and traded positive in the overbought area, I would have had a safety stop at probably the doji low. The fact that it did a left-right combo, if it opens lower, it's definitely coming back down to test the T-line. And OPK, same scenario. When you're in the overbought area and you have dojis, put a safety stop someplace. In this case, I probably would have, because they're all dojis, I probably would have put a safety stop at the low of that doji, because logic would have said if it came back down through there, where are they probably heading? Back to test the T-line. And AMAT, just stay long. You're in the overbought area. You put your safety stop at today's open. Doji sandwich and overbought. Remember that, yes, you're up here in the overbought, and you're gapping up, so you still have a doji sandwich, but you have to take all the other aspects into consideration. You're overbought, you're gapping up, just put a safety stop in. It should go up further. I wouldn't necessarily buy this at this point, no. This is where when you ask that question, you should be looking back and saying, maybe I should have been buying here or maybe down here, but now it's moving. So it's already in progress. There's plenty that look something like this or look something like this. There's better places to have your money. Microsoft got stopped out for a profit, still in fry pan. Yeah, I don't know how you would have gotten stopped out with a profit, why you would have stopped out. Still in a fry pan, too late to re-enter. No, it's probably not too late to re-enter. It's just, again, probably heading for this area. So you have to ask yourself, is this also the best place to have my money? So it's heading in the right direction. Oops, I've done something wrong here. COHU. Kohu. Stay long. I would probably use today's low as a stop because looks like you've hit this upward resistance level. Getting up in the overbought area, just have a safety stop below today's low. AutoWeb, that's a good chart. Make sure your volume is good. Wouldn't be afraid to be buying this one on positive trading. Anticipating wave 1, wave 2, wave 3. Does this chart look familiar? QE. Whoops. Myra, another good-looking chart. Make sure your volume is hefty on that price stock. I'd be a buyer if it came up through the 50-day moving average. Synopsis. Another one I would stay long. You're right at the breakout area. you can, if you want to buy this, you could, but then you watch to see if this is your next likely target. So you still have some more upside in this one. AB. Well, that's a good breakout. You can see the slow curve, fry pan bottom, the doji gap up through this level. Now it did back off. If I was long, I'd have a sell stop right here. If I was thinking of going long, I'd have a buy stop at today's open. If it comes up through there, today's profit taking is over. Let's see, 3 pairs of bullish kicker. I can't see any bullish kickers. Not if you're thinking of gap ups. You know, they're not. That's your best friend signal. That's another gap up. GNW. Yes, you could buy this one. Make sure your volume is hefty. Not a great chart, but it's probably at least coming back up to test this level. Micron. That one isn't great either, but if you like it, you can be buying it on positive trading. A doji sandwich, that would be breaking this little resistance level. Kind of had an inverted hammer. So you can stay long. Then you just have to watch to see what happens once it gets up into this area. An LRCX, Lewis, I would keep my safety stops on. You're in the overbought area. You've been gapping up. A doji kind of broke out through this level. I'd put a safety stop. Let's make this big enough where we can see it. I'd have a safety stop at yesterday or the previous day's close. If it came down through there, it means they're coming back to test the T-line. Workhorse, I would stay long, but it has to open positive. If it opens lower tomorrow, you don't really have anything going on. Alpha. You stay long, put a safety stop here if you're long, or maybe right here. You don't want a shooting star. No, it wouldn't be a shooting star. You put your safety stop here. If they open it and bring it down through there, but I would suspect there's still some more upside. Take your money elsewhere. You've hit the top of the channel in the overbought area. Go find a chart that looks more like this. Stocks. Another one where you put your safety stop somewhere, like right there. Shouldn't come back in that direction. Let's see. I don't know whether I get that one over here. Berkshire, yep. You can buy this one. It's not real exciting. But you can see how it's supported off the 50. So it could get back up into this range. Getting wave 3 buy if it opens. You could. I wouldn't be buying the stock, obviously. I'd probably be going after the fully spread. NTNX. Nothing wildly exciting. You don't really have any trend to it. If you like it, you can be buying it. You have to watch to see what happens at the 200, but it wouldn't be one of my favorites. I probably would be someplace else. We did Micron and Apple. Breakout. Oh, because of the iPhone, all right. CLDR, you can buy this one. You can see the rounding bottom and then the gap up. So some strength coming back into this one. And Vail, nothing wildly exciting either. You just don't have anything great here. If you like it, you can be buying it. If you're long, you stay long. You just have to watch to see what happens in this area. Would you short ExxonMobil? No. Candlestick's coming up. You're above the T line. It wouldn't be a place, or it wouldn't be something that I'd want to short down here in the oversold area. Yeah, that would be a good chart because you got the Morningstar type signal, the Doji Harami right there on the 50. Now that is relevant. If you see a Doji Harami right on the 50-day moving average, you just have to assume that everybody and their brother was getting ready to buy if it supported here. So it looks like it is supporting there. You can buy it on positive trading, giving you a doji sandwich with kind of this trajectory being your next target. AMD, nothing. That's just not a good chart. I'd be someplace else. CSX, the railroad, you can buy this one. Not going to make a whole lot of money, but it's probably coming back up to the top of the channel. So probably good spread opportunity. EDOC, nothing. That's a sideways chart going nowhere. I'd be someplace else. ARC, you can stay long. You're in the overbought area, starting to see maybe a dark cloud. If it starts trading lower, I would suspect it's coming back to the T line. So when Noah went into the ARC, he said, all right, when they landed, said all the animals, go out and multiply. So they all headed out the big gates, and after a while, he heard some little crying in the ARC. And he went in and saw two little snakes in there, and they were crying. He goes, why are you crying? He goes, we can't go out and multiply. We're adders. Where do you put your stop? Yeah, if you want to be safe, just put it back here at today's open. SPWR, there was your profit taking. Where'd they take it to? Right back to the T line. If you've held on to it, it has to open positive and start trading positive, giving you a J hook. If it opens lower, they're still coming back down. You close it out. Did we do Twillo? Just stay long. Put your safety stop because you're in the overbought area at today's low. We did Apple. Apple, you can still be buying this one. Stay short on run. A bearish doji sandwich. So observe the obvious. Gap up doji in the overbought condition. Doji, 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 close below the T line. I would suspect at least coming back down and testing the 50-day moving average. Hammer, hanging man. If this opens lower tomorrow, I would take off half the position. If it came back down through the day's low, I'd take off the other half position. Why is this getting ready to take profits? Look where they gapped up a couple days ago in the overbought condition. Did a doji, now you do a hanging man. Get ready to start taking profits on a lower open. Roku, same scenario. It gapped up a few days ago and starting to sell off. If this opens lower, they're probably bringing it back down to test the T line. And Party City, you can start buying this one. Just make sure the volume is good. Morningstar on the T line off 50 and oversold. Would you place a buy stop or wait one day for confirmation? No, I'd probably be buying on positive trading tomorrow. That is the confirmation, is your signal. All right, well, Square is a 2 or 3 year hold. I thought you got stopped out. I wouldn't hold anything for 2 or 3 years just because we don't know what's going to happen from right now. Technology moves so quickly that what could be a good industry today could be obsolete 6 months from now. Velocity, just stay long. Back-to-back doji sandwich, yeah. But remember, you're up here in the overbought area. They're less relevant, but they're still in an uptrend. You haven't even closed below the T line. I'd put a sell stop somewhere right about in here, but it shouldn't come back down through that level. Is that two symbols? Is that cups or is that Citigroup? You can stay long, anticipating it's heading up to the 50. And UPS. Another one where you can stay long. Oh. Well, just stay long on this one. That's true. Yeah. NTR. If you're long, stay long. It's just, that's not a very intriguing chart at all. And Shopify, you can stay long on this. Little shooting star. Stay long, but have your safety stop below the T line. Okay, party. Where are people going to congregate and party? That's right. On Roku, would you short on a lower open, trading? I wouldn't go short unless you want to really do a quick trade down there. I'd probably be more apt to, because that's not going to be a very big percentage move. But if you wanted to short on weakness tomorrow, it'd be mostly for a day trade. Dow futures are showing a gap down. Down 123. However, AG, this means nothing. The futures don't mean a thing until about 10 minutes before the market opens. Okay, everybody. Have to see what the market does tomorrow. Expect some profit taking, but we're still in an uptrend overall. So profit taking, which means in individual stocks you utilize your the T line on each individual trade. All right, we'll see you bright and early in the morning. We'll see you then.